Hi, welcome back to our Ask the Expert series. Today I'm sitting down with Joe Menninger. Joe is a CCIM and he's also Vice President at NAI Ohio Equities. Joe, today we want to talk a little bit about investment strategies for people or companies who are looking to start or continue their journey into investing in commercial real estate. So first, what are some ways to identify potential commercial real estate investments?
That's a great question. I think the first thing, we'll hire the right broker, right?
That's true.
But I think beyond that, and not self-promoting here, what I always advise, especially for first-time investors, is identify an asset class and become the subject matter expert in that asset class.
Okay.
And it doesn't, you could industrial, office, multifamily, apartments, whatever you want to do. And that way you can really drill down and understand what are the market rents.
Yeah.
What are the operating expenses associated with that specific asset class, because you can't know everything.
Yeah.
And there's a lot of sharks in the water out there and they know that already.
Yeah.
And so in order to compete and identify what is a good place to put your money, you really want to know all
figure out what it is you really want to invest in.
Right.
That makes sense.
Right. Yeah.
What are some ways that you could compare different commercial real estate investment strategies?
Well, there's measurement tools. You can look at cap rates and internal rate of returns and gross rent multipliers. But as far as really determining a strategy outside of, again, once you've determined that asset class, I like to ask a few questions before you even get too far along. Is one, how much time do you want to spend in this in the investment?
Yeah.
So, and that, the return really.
Oh yeah.
So
yeah.
if
Like
you're
the return on your investment.
right.
Yeah.
So kind of like in the stock market, if you put money into a high risk deal, you're going to want more return.
Yeah.
The real estate's pretty similar. So if you're saying, hey, look, I can buy a single tenant net leased asset like a McDonald's, that rate of return is going to be a lot small. That return is going to be smaller, but it's going to be very low risk.
Yeah.
So the amount of time involved in that is going to be very low. We call those mailbox leases. You just go in and you get your mail, you get your check, and you're done.
That's fun.
Other properties, though, that might be a 5% return, though.
Yeah.
Other properties, if you're getting a 10 and more percent return, might be heavier management, right?
Okay.
And so you're going to have to be more involved, and so
that makes sense.
Yeah, but that's the first question. The other one, risk tolerance. You know what I mean? Do you want to there's so many things that you can invest in real estate. If you want to go and do development,
right, that's a whole nother ballgame thing. Yeah, exactly.
So you're investing a lot more time and energy, and a lot more risk.
Yep.
But the return is going to be a lot better. So,
so there's a lot of things you have to weigh.
How much time do you want to do and spend? What's your risk tolerance? And that,
and then you can kind of figure out what it is.
Strategy beyond that.
Yeah, that makes sense.
Yeah.
I guess we kind of talked about that a little bit. But how would someone handle the risk that comes with this type of investment? Yeah,
one thing I always say is, again, some people might say invest in different asset classes. I don't necessarily agree with that. I think don't put all your eggs in one basket is one of them.
Okay.
If you've got $10 million to invest.
Well, that's like any investment kind of. It's like, don't just do one thing. It's kind of like do a couple.
It's like a
of
mutual
things.
fund in the stock market. There's all kinds of different.
Yeah.
In real estate, if you have $10 million, don't go buy a $10 million asset. Buy $2 million assets potentially, or leverage that $10 million and go buy a $40 million or several $5 million properties.
Okay.
But diversify. Don't put all your eggs in one basket. And again, I can't stress enough: stick to an asset class, because it's really hard to know everything about everything.
Yeah.
Even within just one sector, commercial real estate.
Yep.
If taxes on an industrial building is going to be way different than an office building.
Yeah.
There's typically tax abatements associated with industrial buildings. Understanding all of those, stick to one asset.
Okay. Yeah. Well, this kind of takes us into our last question that you don't even know about. This is like a
top secret.
Yeah. So do you have like one tip for new investors who are dipping their toe into commercial real estate investment for the first time? I mean, I guess you kind of talked about it a little bit. Understand your asset class.
Hire the right person. I know it sounds self-promoting.
Yeah.
But, there's so many things that you can invest in. There's so many strategies that you can go after. We can help guide you through that process of, if you're a new investor and you've got, a certain amount of money to invest, do you want to leverage someone else's money? Do you want to go get debt?
Yeah.
Do you want to partner with someone else and get equity and then go get debt? There's so many different ways to do it. But I think talking to a professional about how to strategize, is the biggest. Sounds very self-promoting.
No, I don't think it's self-promoting at all. It's perfect.
Yeah.
It's a good first step for somebody.
Yeah.
Well, thank you so much, Joe. This was really helpful.
Yeah, thanks for having me.
Okay.
Appreciate it.